Over $10 million in crypto just vanished from one of the largest cross-chain bridges in DeFi, and the protocol itself was forced to pull the emergency brake within minutes of the attack. THORChain halted all trading and signing operations after an attacker drained approximately $10.8 million across Bitcoin, Ethereum, BSC, and Base in a coordinated multi-chain exploit. Leading blockchain security researchers ZachXBT and PeckShield independently flagged the suspicious transactions within hours, tracing the stolen funds as they moved across 4 different blockchain networks. THORChain's automated safety mechanisms activated immediately, freezing all outbound transactions and stopping the bleeding before the attacker could access additional liquidity pools or user deposits. Cross-chain bridges have become the single most targeted infrastructure in crypto, with industry data showing billions of dollars in total losses across similar protocols over the past 24 months. The protocol has not yet released a detailed timeline for fully restoring trading operations, reimbursing affected users, or implementing the additional security audits that will likely be required before deposits reopen. Another major global exchange just spent millions to buy a seat at South Korea's tightly regulated crypto table, and if regulators approve, the landscape there could shift dramatically. OKX is reportedly set to acquire a 20% stake in Coinone, one of South Korea's oldest and most established exchanges, according to multiple industry publications familiar with the negotiations. If approved, OKX would become only the second global platform to own a meaningful stake in a South Korean crypto exchange, following Binance's earlier entry into the same market. South Korea maintains some of the strictest crypto licensing requirements in the world, including mandatory real-name banking partnerships and rigorous capital reserve rules that have kept many foreign competitors out. The acquisition signals growing confidence among international exchanges that South Korea's large retail crypto market remains too valuable to ignore, despite heavy regulatory barriers and compliance costs. Industry analysts expect the proposed deal to face intense scrutiny from South Korean financial regulators, who have historically been cautious about foreign ownership of domestic crypto platforms handling local customer assets. For the first time in months, traders openly bet that the Federal Reserve will raise interest rates again, and the timeline they are pricing in could rattle every risk asset, including crypto. The Fed funds futures market is pricing in an interest rate increase as soon as December, a dramatic reversal from expectations of cuts that dominated trading desks just weeks ago. The sudden shift follows hotter-than-expected inflation data that has reignited fears of 2022-style inflation pressures returning to the economy. Bond markets are reacting, with yields climbing and stocks selling off as investors recalibrate for a world where borrowing costs could head higher instead of lower. Crypto markets have historically been sensitive to Fed policy direction, with Bitcoin and Ethereum moving in tandem with broader risk assets during periods of monetary tightening or easing. Analysts caution that December timing is not guaranteed, but markets pricing in hikes rather than cuts marks a significant shift in the macro outlook for digital assets. Subscribe now.